GM. This is Swing Trading Masterclass, and in this lesson I'm going to talk about further entry methods, so how to get into your swing trade, but I'll also talk about spotting the breakout. So there are many ways to swing trade. The way you want to view this as a trader is a swing trade is about the amount of time you hold it for. Now, depending on where we're at on the charts, that can dictate if you hold it for a long time, it can dictate if you hold it for a shorter time, and also can dictate the entry methods you want to use. Because this series is about trying to catch the maximum amount of a trend, you first want to ask yourself, is this a new market phase? Right? That's the first question you want to ask yourself when you're identifying which one of your swing trading systems to use. Because the masterclass is not just going to teach you one, it's going to teach you swing trading systems for every environment. Now, what do I mean by is this a new market phase? I'll explain it here on the charts. If you imagine Solana in this move up, right? And I'll actually play it on to get to the very top of the move here. All right. So this is the Solana move. Right up to the very end. There we go. This price action took place across 65 days. A swing trade can be anything from several days to several weeks. Now, you're not going to catch the bottom to the top. You're trying to catch a chunk out of the move in the middle. And you may take that into several different phases. So there are swing trading strategies that you will employ for catching the breakout off the lows. So for example, you see this low forming, starts to lose momentum to the downside. There's a big impulse up, pulls back, and maybe you get long on that retest. You're expecting a higher low. Okay, that's your first trade. Right, that's trade A. That's when you say, okay, this is a swing trade entry, wherever it's going to be in this area. And my play is to ride it up to the next resistance, maybe until this liquidity gets taken out. Or, of course, if all the systems are valid, if all the signals are still valid, if you're still holding trend above the 4-hour bands, as you see here, no reason to exit. And you get the entire trend move all the way until the bands go red over here. That's like a ideal strategy. That's in a perfect world, right? But there's also swing trading systems that are absolutely valid that can be within this. So maybe you didn't catch this first move and you saw this happening, but you're observing Solana as it consolidates at the highs here, has a nice trend line breakout into the bands, and impulse is up there. And let's imagine you bought that impulse breakout. This is your second phase, which again, maybe you play it up to here just over a few days. Maybe you play it up into this area and close it after it deviates those highs. So maybe you take a chunk out of the middle phase. So trade A, you're looking at 35-day hold. Trade B might just be a 10-day hold. But again, both excellent, valid swing trades. And then you can have a trade C as a swing trader, which is your final extension. If you understand that trends tend to have three legs, or at least 3 impulse, consolidation, impulse, you could take the very same thing with a principle of maybe a breakout strategy. After it, here's one of my favorites. After a false breakout, buy the second breakout. So you had a false breakout here. Everyone thought, oh, Solana's gone up too much. Maybe it's over. Rallies back up. Another breakout. And you get in there and you ride up to the top or close it here. And of course, you can see the diminishing returns as you go up. That's totally normal. If you nail the bottom, you're obviously going to get a better returns than if you nail or if you enter at the middle or enter at the top. So, what you must always be aware of and remember is this a new market phase? And so a new market phase for Solana would have been down here. Your earliest point at identifying a new market phase was here. Price grinded down into these lows, consolidated, had an impulse up, corrected back. Now you didn't have to say it was a new market phase here, but as it's in this structure moving into this breakout, as price is shaping around into that area, this is where you're starting to say that there is a new market phase. You've got several ways of visualizing this. We had a downward sloping trend. Right? Downward sloping trend that was broken. We had the bands going green on the daily. We had an impulse, right? Compare and contrast the price action where there was initially an impulse and then price just kind of grinded down. No big impulse, no big, no strength, no power behind it. And then suddenly we impulse up, bullish, corrects back, and away we go. So if it's a new market phase, you want to be using the entry method that I'm teaching today. You can also use this entry method on any time frame because of the fractal nature of markets, which you'll see. But you're trying to find an impulse which will not retrace, right? You need an impulse candle. This all starts from the perspective of where am I wrong? Always remember that. Risk management is number one. And if you want to nail the best entries, you want to find those candles that never get revisited. At least not until the trend is over. So, I'll show first of all how you do this. What do you need for this? You need one thing. All you need are the 1221 EMA bands. That's it. And start on a daily. I'm only starting on a daily here just for the purposes of this lesson, right? To show you. What we're looking at here is as price is impulsing at the earliest stage where it could be a new phase, right? We had a strong sell-off for Solana. It then had a corrective bounce, went into a consolidation, right? Into consolidation. Then all of a sudden, big impulse candle, followed up by another impulse candle, bands flip green, and away we go. Consolidate, trend, all the way up. Really nice swing trade could have been had in there. So how do you find that perfect entry? Well, you first need to know that the level you're looking at is a breakout. So how do you spot the breakout? You want to go to your lower time frames. 4H. All right. Looking here, I need to drag this over here. A little trick for the time frames. There we go. So as you can see, I have it here. It's this candle. Sorry, I should have it on. So the candle we're looking at is right in here. I've pinpointed this candle because my invalidation needs to be below the impulse candle. You need to become comfortable with buying into large green candles. Large, full-bodied green candles that open at the lows and close at the highs, they are some of the best entry points you will get because something is happening there. Whenever Solana corrected sideways for a week, yeah, grinding, and that gets all retraced in one candle with volume, with super high volume, strong volume, just retraces 7 days of price action in one go. The market's telling you something. It's not telling you that it's going to go up only, but it's certainly telling you that you now have a clear invalidation, which is putting your stop loss below the low of that candle. So you start with your invalidation when you see this candle form. Now, a lot of people have commented to me, and it's absolutely true, a lot of people have commented to me, and we should actually watch this develop in real time. that commented to me that, you know, when you buy into a break of structure, when you buy the breakout, quite often price pulls back, so you could get better entries. And I often ask them, well, do you get better entries? And they say, no, I struggle to get better entries because the method you have taught, where the break of structure equals new change, a shift of character in the market, that is the best method because it shows market structure is broken. And if I blindly buy there, yes, I do end up in profit. But sometimes it pulls back. I could have got a better entry. Sometimes it pulls back and stops me out. And I feel like I'm buying into false breakouts. So, there's a few things with that. The number one thing to remember is you're not trying to catch every tick in the market. And if you can do something as simple as identifying the best impulse candles and then widening your stop, you will avoid all those issues. But I am also going to show you how to get a better entry than just buying the BOS candle. So let's get into that. Right, so we want to know, how do we get into this candle? How do we know this is the breakout, right? I'll get rid of that for now. Well, we've had a 4-hour confirmed break of structure. Big breakout, big 4-hour candle, all the way up. Very good. What you want to look for now is you want to go to, and I should go back one candle. What you want to do here, as soon as you get that first candle, once you get that 4-hour close, so imagine you're here now, 29th of June at midday, right? The 8 a.m. candle closes at midday. Here's what you do. Get onto the 1-hour time frame. And now look at the 15-minute, sorry, the 1 hour 1221 EMA bands, the Michaels bands. You have now had an extremely strong impulsive move. Nobody would have bought here. They weren't buying here. They weren't buying here. FOMO buyers are going to be buying here. So you're absolutely right. Even though this is a ripping candle that looks like it's never going to pull back, it probably is going to pull back. Now, when it pulls back, the psychology of the bad traders gets them wrecked both ways. So they want a FOMO in here. And if they don't, if they hold off and then it pulls back, they want it to pull back more. They want it to fill the gap in. They want it to come back to some other moving average, right? Let's say you get the 50 or the 100 EMA. These are very common. I'll just leave the 50 on, right? Because what trend traders do is trend traders wait for a breakout and then they want to buy on a retracement into a moving average. Because that's how trends form. When you see a strong trend, the moving averages are pointing up and to the right. And you've got the 50, let's say this one is. You've got the 100, and you've got the 200, right? You've got whatever, MA, EMA, doesn't matter. Use whatever you want, backtest them. So that's what they're looking for. So we've had this breakout. This means eventually these are all going to go in the right order. 50, 100, 200. And the trend trader wants to take a nice entry off the bands whenever they're all pointing the same way, rips higher, and they look like a genius. Cool. In fast-moving markets, especially at new trends, these new shifts, market phase, you will very rarely, in fact, here's a little piece of alpha for you. I have the 50 EMA on here. If this hits the 50 EMA within the next few candles, that is not a time you want to buy. That is not a sign of a strong breakout. The strong breakout should dip. Yes, it wants to flush out some leverage traders, but it should not come straight back into the 50. That's too far away. So what do we use? The 12 and 21 EMA. We use our faster moving averages. Because that's what the market does, right? Even though most traders narrow down to, a 7 EMA, a 9 EMA, a 12, a 21, a 20, a 50, 100, everyone has their selection, and you should have your selection of short, medium, and long averages, whichever ones you like. Even though there's all of those available, the ones you want to focus on are the short ones. So whatever short ones are for you, use those. And this is the best method I have found. So Let's play it on and watch. So what we're doing here is we want to buy whenever there is a valid consolidation at the 1221 EMA on the 1 hour. Remember, your trigger is a 4 hour breakout. Trigger meaning your trade is now valid. Not entry, but that's your trigger to initiate the trade. Your entry signal is going to be the 1 hour bands. Okay, boom. So now we've hit the 1 hour band. So do you enter here? Yes, you can enter some. You can enter partial if you're doing it here, would be my advice. If you want to scale in, again, just put this in your strategy. The way I would do it here is I would put 25% in, right? So if I wanted to put 1 sol, that'd be a fucking big buy, wouldn't it? Yeah. I only needed to go 700,000x to make any money. If I was going to buy 1 Solana token, 1 whole Solana token, 1 sol equals 1 BTC, maybe one day. If I wanted to buy 1 sol, I buy I'll just say it for 1 sol position size, right? I would buy 0.25 here, right? That's where I'd take my first entry. In fact, I'll use the call out. It's a bit cleaner. 0.25 sol. Just to be clear, in case anyone doesn't understand what I'm saying, a position size of 1, you would enter in quarters. 0.25, 0.25, 0.25, 0.25, right? The invalidation is down here. So obviously scale your orders to the distance between the entry and the invalidation, just like you would have on your position tool, right? Make sure that your total risk, once all 4 trades are on, is equal to your maximum 1 R. Simple? Yeah. Now, we allow this to develop, and this is why swing trading is so good, and it's the best form of trading in crypto. Swing and position trading. Scalping and day trading are fantastic for exploiting mechanical edges. What a mechanical edge is like the impulse strategies that I talk about, where what happens when the first 5-minute candle of the day does this, what happens when there's a red low on a Monday and a red low on a Tuesday, a red candle, those kind of scenarios. Because here's the truth. Intraday, if you try and trade any other way than just mechanically with an edge you've gained, you're going to get crushed, because most intraday price action is random. And don't believe what the bullshit artists tell you about taking 10 fucking day trades a day and crushing it and making loads of money. The markets will eat you alive if you're trying to take loads and loads and loads of trades without context. So anyone who's excited about the day trading masterclass, you're going to be in for a treat. It's all about scenarios. You must add context to your TA. Now, in swing trading and position trading, you don't have to add any context to your TA other than, is number going up? This is why it's so good. Because in crypto, you have to sit through weeks of consolidation, weeks of downside, weeks of it looking like shit, weeks of people getting flushed out, right? We're going to have those. We had them a few weeks ago. We're going to have them again. But when the market starts to go up, you know that by getting on early, you have a wave of buyers coming along to lift your trades up into profit that you may never have imagined before. Because the market always wants to go up. And as long as we are below all-time high on Bitcoin, this strategy is going to print for the people who employ it correctly. It takes a lot of discipline and patience, right? You must have discipline and patience, because this whole thing, let's watch it forming, right? Let's say you saw this really nice rally. Maybe you caught some swing trades in here. Definitely some swing trades could have been had in here. This was a nice rally up for over 5 or 6 days. You could have got a trade. Then you had to watch Solana retrace back for 7 days. By the way, if you're watching this live in 4th of December, guys, keep an eye out for this, because there's plenty of charts that look like this right now. Watch for any of them that do a 7-day, 1 week, 10 days, that pull back and start to show something similar to this. Okay? The point is, you have to be patient. So you have to sit through 7 days of shit. And you should, by the way, because I am very, very, very strongly encouraging everyone to be a long-only trader in a bull market. Because look at this. There's no edge in shorts here. Okay? Yes, you can short this down. Yes, you can short that. Yes, you could short the top and wait for it to all come down. But you have to sit in a short for 7 days, getting yourself crushed, and all the while, this one showed a nice retracement, but all the while, the risk, if you shorted here, stop loss here, you were so close to just getting wicked out there. And this whole same structure would have happened, you would have got stopped out, and you're fucked. And that happens over and over and over again. So shorting really is negative EV in a bull market. Again, day traders, scalpers, don't worry, because I have systems that I'm going to show you, break down my live systems, that do give you shorts intraday, right? So I'll clip this, or I'll remind myself to put this out on my journal, if somebody would be kind enough to remind me after. There's a lot of misconceptions about long and short. If you are a scalper or a day trader and you trade context-driven, scenario-driven trades,